Good evening, Theo Trade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for a huge trading session here on the 10th of November in 2022. These little numbers right here, and they're in the news tab this morning. It was the CPI of all the data that took place today, of all the headline news, everything up and down. These little numbers and a tiny improvement is what sparked a huge rally on Wall Street. So in tonight's video, we'll focus a little bit on that. Not so much the numbers. We'll look at those in later sessions. But what happened? Where are we standing? And where are we going as we're beginning this month? Is this the pivot? Why was the NASDAQ up that much? And of course, right behind it was the XLK technology sector, but not to mention gold, the bond market, and leading stocks in the tech sector. So let's get right to work. Starting off, the intraday, or at least the pre-market information, was that we had the CPI. The last time we had CPI, again, one of the last times, September, we had a big downtrend day and a big movement off to the downside because inflation numbers came in a little bit hotter than expected. Hotter just means above the estimate, and that is not good for the broader economy. It does mean that the Fed has a little more leeway in raising interest rates, and of course, that's going to put pressure on bonds and stocks. Well, the opposite is true. When the inflation numbers and those little things right there, and if that comes in a little cooler than expected, all it takes is a little spark to ignite a rally, and ignite a rally it did. Don't lose sight of the picture that inflation is still running year over year, 7.7%, and the core CPI, 6.3%. But let's not get ahead of ourselves. The number was enough of a catalyst to spark a short squeeze or a gamma squeeze or a bullish movement. And we're going to talk about how that played out, not just in the equity market and what specifically in the equity market was the highest, but in gold and treasury. So let's start right there. Let's go to the bigger picture. What we've had for the bulk of 2022 is this concept that inflation drives the train. So if inflation is a big concern, it is. The Federal Reserve is going to use that as a catalyst to raise interest rates. And the idea being it cuts economic growth, cuts some of the economic gains, and of course makes borrowing cost higher, and that puts pressure on companies, corporations, and stocks. But if the Fed raises rates, as simple as it seems, rates go up. And we're going to focus on just these simple concepts. If inflation is a big deal and the Fed raises rates, rates go up. And behind that, the bond market, which is priced in dollars, if rates go up, the bond market goes down. So that's easy. Behind that, of course, the broader part of 2022, the dollar index has gone up with higher rates and higher interest rates compared to other central banks in other countries, their GDPs and etc. If our interest rate is higher, the dollar index will go higher. And other things will play, which is giving a weakness or a bearish type of outcome to technology stocks. And we've seen some big technology names take a big decline to the better part of 2022. So that's the foundation, looking at XLK, technology sector, of course the NASDAQ, the QQQ, and individual stocks. We might look at Facebook. Of course, that list goes on and on and on of technology stocks that were weak in 2022. So if that's true, what is the opposite picture? If the picture starts to shift, that inflation is coming down, let's go right back to the other side. If inflation is going to come down, might yields also come down? And that's what the key was in today's session. And it might be something that sparks these changes going forward for the meantime. So this is what we are putting it into a broader context where CPI inflation goes down the markets and up the markets. So if inflation is cooling, the Fed can be under a little less pressure to raise rates. Rates could go down. That can be seen in TNX, TYX, as we see those come off in a big way in today's session. On the flip side, if bonds have been weak but inflation starts to go the other way, which is down, the bond market could and very will travel higher. What about the equity market? In general, it would travel higher, but because the weakest and the most impacted by interest rates, and that's been the case for 2022 already, is the NASDAQ. So it makes complete sense that if the train goes the other way, the strongest stocks and the strongest bounce back is going to come from the NASDAQ. And that is generally speaking true and how we're framing today's session. So the leadership in today's market, we'll pull these out. Just looking at which stocks were on the biggest gain in the S&P 500, that would be mostly technology stocks. Just naming NVIDIA was up about 14%. Amazon, a big stock that's been beaten down, of course, it just had headlines. It was the first stock in the world to lose $1 trillion in market cap. Came from $2 trillion down to about $1 trillion, and that made headlines just recently, but not today. A little bit of that market cap is being bounced back. 12% of an increase in Amazon shares today. Adobe, PayPal, Meta, again, a stock that's been beaten down through the better part of 2022 on the higher interest rates. If interest rates start to turn, inflation starts to be less of a concern. Meta and other technology stocks will be on the benefit, as will Qualcomm, Apple, Microsoft, Intel, there's Netflix, and of course, Google and others. So that's the theme that I wanted to get across in today's video, that we're reversing, or at least getting a other way. If inflation goes the other way, all the things about the down equity market, the down bond market, the up dollar, which is here and breaking down, and of course the up yields could be under significant pressure, and we're seeing that kick off in today's session. So that's something we'll be watching in the weeks ahead and through the remainder of the year. Now, outside of that, we're getting headlines and news in the cryptocurrency market, and we'll let Don discuss more about this in tomorrow's video, but it is worth noting that with all the factors going on, Bitcoin, cryptocurrencies across the board are seeing new lows and big sell-offs. It might not look like a lot on the chart time frame, but this sell-off from 21,000 to 16,000 cryptocurrency Bitcoin, that was a 23 or 25% sell-off within a few trading sessions. Of course, there's headline news, and that will continue rippling through the cryptocurrency, Bitcoin, and other cryptocurrency markets. We won't discuss that in this video only because there is so much else to discuss, but realize that that is a part of the landscape. Looking back at there is our CPI, there's the calendar. We can look at the visualize, but there is the S&P 500, and just look at where the concentration of green is. All across the board, certainly, but coming mostly in the technology sector. That's in the S&P, there's the NASDAQ, and that is just about as green as we can get. Microsoft, 8%, Google, 7%, Apple, 9%, NVIDIA, 14%, Amazon, 12%, Tesla, 7%, and Netflix, 8% across the board. This is where the strength is, because the narrative, or at least the thought process, if inflation is to come down, that's an assumption. This is one data point, but it did result in a major move for technology shares, and those have repeatedly been under pressure in 2022. Inflation being the headline. If it cools, technology stocks could be the biggest beneficiary of a turnabout. But let's go back and see which stocks in today's session. We saw that none of them made new lows. Again, nothing was making lows in today's session because everything was up. But are there stocks that are leading the pack? Technology stocks, certainly, but those technology stocks are way down in the year. But let's take a quick look before we end the video at which stocks are making new highs. So let's load the scan query. Let's go to the public stocks making new yearly highs. I want to sort that in the S&P 500, and we'll scan, we'll detach, that way we can get it into the chart. But which stocks are making those highs? McDonald's, Gilead, Progressive, MetLife, O'Reilly, and others. Not a big group and not a lot of names with high market cap, but a quick look at those names shows McDonald's snuck to a new high, but Gilead powered to a new high, Progressive, another new high, and this is the thought process about why we do these scans even on big sessions. Stocks that are making new highs are attracting money flow. Most likely they have good fundamentals, which we can look at and compare, but they tend to make additional highs, Progressive being one of them, as is MetLife, O'Reilly Automotive, and these mostly are retail or insurance names, or somewhat of financial. There's Aflac, but not a lot that we see from a large market cap standpoint, because the large market cap standpoint, they're stocks in general that have had very weak 2022 performance. But on a reversal, you're seeing the strength concentrate in these names: Adobe, PayPal. And again, this does not look like much. That's one of the major points to discuss. That doesn't look like a lot, but it's a big move because these stocks have been beaten down through the bulk of the year. And we can see other names such as Qualcomm, Apple, which is a retail name, a little bit of technology, and of course Microsoft as well, Intel, Netflix. So as we reassess, we'll have Friday, we'll have the weekend, and the remainder of November. But for now, caution, game on to the upside, which is just a similar bear market rally and strength to the upside as we've seen a couple of other times, and we're just getting a little bit higher move in the context of a strong rally against a broader downtrend and even bear market. Be careful, be safe. This is Corey Rosenblum with tonight's Theo video update for November 10th, 2022.